Hi guys, welcome back to The Block on Blocks here at Web3 TV Studios. Today's guest is very special. Mr. David Lucatch, our Chief Investment Officer, is here all the way from Canada. Thank you for being here.
Thank you, Nikki, for having me here.
Of course. And today we have a very important topic to discuss, RWAs and tokenization. But before we jump into it, I would love if you could give a quick introduction about yourself and how you ended up here at The Block.
Okay, well, let's see if I can condense this down a bit. So I started in the internet space in 1994 with payment tech, and was very fortunate to help develop e-commerce in Canada. And once I left that, which was my first public company, I then created an incubator and ultimately incubated an AI product that was used by 212 million people around the world starting in 2010. So we did LLM, NLP, which is natural language processing, and machine learning in 2010. We were running our own server farm at the time. So took that public, exited that, took another couple companies public, and digital identity, avatars and gaming, and made some investments along the way. And one of the investments was a company that is related to TheBlock. And the team asked me to come out and help for North America when I was here earlier this year, and then asked me if I'd take on the CIO role. So here I am. You know, I've been around the block and now I'm with the block.
With the block, amazing. AI in 2010, that's crazy. That's really impressive. And you have a Guinness record for that, don't you?
Well, I actually share a Guinness World Record with Paul Stanley and Gene Simmons from KISS. Yeah. We have the most nationalities in an online chat.
Because the AI was translating.
It was translating around the world.
What year was this?
I want to say 2011.
That's crazy.
It is, yeah.
That's awesome.
Yeah, it was really exciting. We did a lot of work with the movie industry,
yeah, with
the television industry, with the gaming industry. So people were able to actually translate messages across all the major messengers around the world instantly in 68 languages.
That's really cool.
Yeah.
Okay, so now at The Block, ever since I met you, which a couple months now?
No,
maybe more?
It's been 6 months or 7 months, yeah.
You've been talking about RWAs.
Yes.
Right, and you always said that this is going to be the next big thing. So I want to start by getting your definition of an RWA for the people. What is an RWA?
Well, an RWA is a real-world asset, so we start there.
Yeah.
And what's a real-world asset? I call them Web 0, right? It's they predate, in most cases, the internet. So a gold mine, a manufacturing product, a piece of real estate, a piece of land, those are all tangible items. Commodities like bars, those are all really tangible assets. But there also are intangible assets, yield-bearing products, equities and securities, invoices and factoring, financing, a lot of different products that you can't touch or feel.
Yeah.
So that really is the qualification of real-world assets. And what we do is we work on a process where we allow those to be tokenized or digitized and then democratized around the world.
Okay. And when we come to the process of tokenizing, I would love for us to dive deep into what that looks like, because I think it has become a buzzword, right? Everywhere you go, you're hearing someone's tokenizing this, someone's tokenizing that. A lot of events now have RWA in their titles.
Right.
And I think a lot of people don't fully understand what it really takes to tokenize a real world asset. You always say it's like taking a company public.
Right.
So tell me more about what that really entails.
Well, we're going to hear a lot of buzz about real-world assets or RWAs. And, you know, I want to say a significant percentage of people who talk about them will be talking about the buzzwords, but not the actual effects or requirements to make that happen. At The Block, we understand the process from what I like to say is stem to stern or head to tail. So how do you start with a product, and is it the right product to tokenize? That's where we start. You know, we look and we assess the business or the product to see if it's viable for tokenization. Because some products, even though the gold is very hot right now, but you may not have a client that has the right structure to the gold or in the right region or the right viability. So there's a lot of analysis that has to go on, same as when you take a company public. And do you want me to go further into like the 5 steps of 5 buckets as we go?
Yes.
Okay. So we call them the 5 buckets. So we start with structure.
Okay.
How is the asset structured? Does it make sense to tokenize that asset under a structure where you can allow others to participate in that through tokenization?
Right.
So we look very carefully at what the asset is and how we would structure it so that we can tokenize it or take it to digital format.
Okay, while we're on structure, what do you mean by structure? Because let's say there's like a big bar of gold that we want to tokenize.
Right.
What kind of structure?
Okay, so structure is the framework of tokenizing the product.
Okay.
So do we need to tokenize the shares of gold? Does that person owns, or that organization owns this bar of gold? Do we put the gold into a special purpose vehicle? And then do we tokenize the shares of that gold?
Okay.
Do we make it, do we create a stable coin, which then is backed by the gold, right? What is the structure? What is the framework, both legal and otherwise, and financial, that makes it work, right? It's the architecture of the product.
Okay, and I would assume that the structure would have a lot to do then with how you're regulating it, right?
Yes.
So step 2.
Step 2 is compliance.
Okay.
So step 1 is structure. Step 2 is compliance. So compliance is how you fit it into a regulatory framework. So each jurisdiction around the world, US, Canada, the EU, EEA as a passported member states, Australia, every country or every region has its own set of requirements for tokenizing a real world asset.
Right.
Commodities aren't securities, and stable coins aren't securities. But if you were to sell gold through another process, that, as I said, take that bar of gold, put it in a company and sell shares, that is now securities. So we have to look at where you want to do it, how you want to do it, and from where and to people will invest. And what are those regulations? Will it be only a particular type of investor? Does it have an exemption which allows certain other investors to invest? Do you require a registration statement or a prospectus? There's a lot of nuance that goes into the regulatory framework. And we have not only internal resources, but we have access to some great minds and some great counsel out there that we can recommend to our clients.
Yeah. So while on the topic of regulation, I think I have a lot of questions in this area. Firstly, how difficult is it to get regulated if you're like a RWA project? Because I think a lot of people underestimate the real path to getting actually regulated and being able to issue those tokens.
Yes, I mean, again, we're going to see in Web3, there is not always a lot of compliance, right? So people do what they think is right rather than what is actually right.
Yeah.
So those that invest, if they don't do their own due diligence to find out that someone has done that correctly, can be subject to possible risks and loss of capital. So we do everything we can to make sure that everything is done right. So we need, again, it goes back to understanding the product and the process. But at the end of the day, what we're really focused on is giving a client for a real world asset, a real world expectation, what it does. And it is a difficult process, but having taken company public and working with teams that work in the securities and the RWA field, I'm confident that if the project has what we call legs, we have the ability to make it soar.
And so when it comes to the regulators of virtual assets, relatively new, obviously.
Yes.
But there are 2 ways that countries are doing it that I've noticed. Either they're like Dubai, they establish a whole new regulator. So the Virtual Asset Regulatory Authority, not related to the SCA, completely new regulator with completely new rule books. Or they do it like the States, where the SEC, who's been regulating the financial instruments, is now also regulating the virtual asset instruments. Which do you think works better?
Both and neither.
Yeah.
Right. So there's pros and cons to both. When you have a new regulatory regime, it takes time for everyone to understand all the nuances of what's going on. Some people may be new. It's a new team. There can be challenges among the team members in figuring out which ones we think will work and which we won't. Where it's like a parent who's had 4 children, right? They're pretty relaxed about the 5th.
Yeah.
Right. So while the 5th may be more creative than the other 4, there's still there's nuances in handling the children.
Yeah.
So a regulator that has many years of experience may be an immovable object as well. They may not want to move towards the new things, and we're seeing in the U.S. the administration, because of the new administration, regulation changed very quickly. But even though the Jobs Act, which helps support some of this regulatory change, has been around for many years, tokenization of assets or tokenization in period has been a very difficult subject in the United States.
Yeah.
So I think there are pros and cons to a new regime or an old regime, depending on the flexibility of the people to want to do something new and with speed.
Yeah.
Because today, Web3 moves, something today is different tomorrow. Regulators have a hard time because they have to put it in place frameworks that have to last a long time.
Yeah.
So it's hard for them as well.
Yeah, of course. I think it's a big challenge for everyone, but I think everyone's hopping on board. It's interesting. I was talking to this gentleman yesterday. He was from Kenya, and he told me that last week they passed a bill to start regulating crypto companies now as well in Africa, which it's so cool because now it's really expanding everywhere.
Well, yeah, because it becomes a situation where you have no more control as a regulator.
Yeah.
There's been, when we've all seen this, there's been organizations that have bought blocks of shares in the United States and then tokenized those blocks of shares out of another jurisdiction.
Yeah.
Well, that doesn't sort of fit the US regulatory rules.
Yeah.
So, organizations like NASDAQ said, okay, it's time that we updated our rules because it's already happening around us.
Yeah.
Right. So it's sort of like the horse has left the barn. It's, closing the doors now doesn't make any sense.
Yeah. Last question on the topic of step 2 regulation. So let's say that a project gets regulated in Dubai. Are they able to then kind of sell on a global scale, or are they limited to Dubai? And is that true for other jurisdictions? I think essentially, is it possible to have a product that you can sell on a global scale, or at least multiple jurisdictions?
So I can't give advice because I'm not counsel.
Okay.
But the answer to that is based on if it's a securities transaction, you need counsel that will give you that advice, but it may require you to file in multiple jurisdictions. Again, the landscape is changing, but the conservative approach is to file in multiple jurisdictions.
Yeah. The reason I ask is because for anyone that may be watching, to think about these things before they just pick a jurisdiction to file at and then move forward. I think thinking about your target investors is also important, right? Okay, so step 1, structure. Step 2, regulation. What's step 3?
Or compliance, as we call it.
Or compliance.
Step 3 is your primary listing.
Okay.
So primary listing means your first attempt at getting investors. And there are emerging launch pads for RWAs, but those launch pads are really focused on what we call AQSP investors. So in different jurisdictions, investors that... AQSP. Okay, so in different jurisdictions, there are qualified investors that have a certain level of sophistication. So I've used two of the letters already, and they call them by different names. In North America, we primarily call them accredited investors.
Okay.
It means we have the means and understanding to be able to invest in something and understand the risks of losing that money.
Okay.
In some jurisdictions, they call them sophisticated investors. Some jurisdictions, they call them qualified investors, and some professional.
Professional.
So there are different exemptions. So again, I have to be careful. I can't give advice, and I'll say that quite often because I'm so used to it from the public side of the business. But to sell something without a prospectus or registration statement, you need to use an exemption that exists within the securities laws.
Right.
So commodities don't follow securities. In some jurisdictions, you can sell to friends and family without having to post a registration statement. So there's different exemptions. So being an accredited, a qualified, sophisticated, or professional investor is an exemption from a security registration. In places like EAEU, there are different levels of exemption where you can actually bring in not only the AQSP type investors, but retail investors if you follow the rules. Up to about 8 million euros, depending on the jurisdiction.
Yeah.
So really, TheBlock, working with a client's counsel, will help to develop the right structure and compliance, and then look to what is the first phase of investment. So getting investors is the toughest part, right? And so everybody says, well, can you help me raise money? Again, you have to go through the steps to get there. And it's just, if you do it right, it's so much easier to continue to do it as you move forward. And so at TheBlock, we do have access to investors, and we do have access to investor pools. So based on what we do in step 1 and 2, we would introduce our clients and encourage them to do the same and attend events and do all kinds of things and we would prep them so that they would have hopefully their first level of investors, and they generally are what I would call accredited level investors.
Okay, so that's the primary listing.
That's the primary.
Okay, and for the primary offering, does the token necessarily have to be on an exchange?
Again, if you're on a launchpad, a RWA launchpad, the token will likely be issued at that time.
Okay.
So, and it's a way for accredited investors to manage trades among other accredited investors. So think of it as a preamble to a larger exchange.
Right. Okay. So we have the structure, the compliance, the primary offering, and then what's next?
Secondary.
Okay.
This is the holy grail.
Yeah.
So the difference between a public company and a local jurisdiction, whether it's United States, Canada, EU, whatever your jurisdiction, the UK, is that you can only trade those stocks, even though they're in digital format. Even stocks, we don't get certificates anymore. Everything is digital, right? So you can only trade those if you have access through your trading platform to a brokerage firm that then trades within that jurisdiction.
Right.
So if I want to trade, a U.S. stock, I may only be able to trade it in the United States, and if I'm not a U.S. resident, I may not be able to trade that stock.
Right.
So getting to a democratized or decentralized, I want to use the word democratized better because there are different types of exchanges. I don't want to talk about decentralized exchanges today, but getting to a democratized market, it gives you an increase in potential demand while still having the same supply. Right. So that can give you growth opportunities.
Okay.
So getting into a secondary listing or a centralized exchange is an amazing way to go. And we are seeing more and more centralized exchanges start to accept RWAs for listing on their platform. And there will be restrictions of where you can and can't sell to: KYC, know your customer, know your business, KYB, AML, anti-money laundering rules and laws. So there's a lot of things that go on. Again, we have the expertise to deal with that.
Okay. And so when we talk about centralized exchanges, obviously they all require very deep liquidity for a token to be listed. So I would like to discuss also a little bit about what the market looks like right now. Are there any centralized exchanges that are taking up RWAs that we know of?
Yes.
And then also creating that liquidity for an RWA, what does that look like compared to a utility token or all the instruments we've seen so far?
So there are CEXs or centralized exchanges that are accepting RWAs, and there's different protocols for the different types of tokens. So it usually is an EVM compatible, Ethereum virtual machine compatible token. At the highest grade for RWAs is something called a 3643. And 3643 are really more challenging to use on a centralized exchange. So they're really reserved right now, although it will, again, I think, proliferate. They're more reserved for bank-to-bank transfers, large values and sums where you need to know that the receiving party is who they say they are and the sending party is who they say they are.
For people watching that might not understand the technical terms, could you explain a little bit more?
Sure. So when I want to send a bank wire, okay, I go into the bank, fill out all the information. They need to know the receiving end as well. They need to confirm both parties. That would be more like a 3643, where you need to, it's more peer-to-peer.
Okay.
Even though it might be through an institution, it's more peer-to-peer. An ERC 1400, which is down a little bit low, allows you to set up some parameters, some attributes of the token that you only can get it in 3 months. Those might be time locked, or there might be other conditions for an ERC 1400, where an ERC 20 or compatible to an ERC 20 is whatever. That's it's sort of like, is that's sort of the framework.
Yeah.
So again, not to get too technical, but we have to understand what the motivation for that product is to be able to understand what to do. A centralized exchange, for lack of anything better, takes everybody's tokens and sort of commingles them, right? So you can't do peer-to-peer, it's really a commingled exchange. So we use an ERC 20, or we wouldn't use an ERC 20, we'd probably use an ERC 1400 for that particular opportunity, so that the tokens can be unlocked and then they can be put on an exchange. So there's different types of tokens, and there's many different blockchains, and most of them are either EVM compatible or have what we call a bridge to get to EVM compatibility. So anyone who's designing a project, depending on where they may get grants from, may get support from, we can help them with that.
Yeah.
And then with the different exchanges, there's more and more every day exchanges that are saying that they will do RWA tokens, because the difference between, and then I'll come to liquidity, but the difference between an RWA token and a utility token is many utility tokens are driven by the implied value, the sentiment of that token, the future promise of something to do with that token.
Yeah.
It has a utility value. Where RWAs have asset value built into them, right? So it says, I've got $1 billion in an asset here. So the volatility is less,
right,
or should be less.
Yeah.
And so they don't, in my humble opinion, require the same liquidity pools, because there isn't going to be as much of in my humble opinion, a run on the bank as there would be with utility tokens, right?
Yeah.
And when we get to the last bucket, it'll become more evident on why RWAs are different. But you still need a liquidity pool, you still need support, you still need a lot of things that go on. But your responsibilities as a person running, or an organization running that RWA, go up as well. Because if you're running an RWA and you've done it properly in a jurisdiction, you may be responsible for reporting to that regulator as well.
Right. I have a question about something you just said.
Mm-hmm.
So does demand and supply not affect an RWA token at all?
Oh gosh, no, absolutely does,
Mm-hmm.
right? If I put out something that nobody wants, then anybody who wants to sell it can't get a price, and they'll probably lose money.
Yeah.
Right, so supply and demand. But the difference between a publicly listed stock, let's say like Canada, Canada's a wonderful country. I love living there, born and raised, but there's only 40 million people. How many investors are there that trade stocks in that one jurisdiction?
Yeah.
Where you go to the EU, EEA, you may have 800 million people, right? So if you start adding on other jurisdictions to that, you may have billions of people who, if they know about your product, may want it. So the demand side becomes potentially greater because the opportunity is greater.
Yeah.
Because it's just you have the ability to reach more people, but your supply is still fixed. So the supply and demand equation goes off immediately.
Okay, so it still does affect the tokens.
Exactly.
Okay. So now moving on to the fifth bucket, which is
marketing.
Yeah.
This is what I think is, I want to say marketing and communication, because a lot of people have, they think marketing is just promo, right? And I won't be able to remember all of them. There's the 4 P's of marketing, and now there's the 7 P's of marketing, right? So there are different aspects of marketing. Advertising and promotion is just a small sliver of what the entire marketing equation is. So when you do an RWA, you have to think of a sandwich with your RWA right in the middle.
Yep.
On the top layer is PR, public relations. And that's all the outward-facing communications. That's all the goodies that you do to make your brand known and everything that's great about you and your outward-facing image, you know? Then on the other side of the equation, underneath the RWA, is what we call investor relations. And this is really a big area where utility tokens, in my humble opinion, start to fail.
Yeah.
Okay. So they do a great job of promoting the token until it's listed.
And then boom.
And then they stop. And so we all know what happens.
Yeah.
If you stop an airplane in the air, we invariably know what might happen, right? There's a glide path, but unless you have a long glide path, you may have a problem.
Yeah.
So investor relations, which is the backbone of marketing for public companies, becomes, the quintessential requirement for RWAs. So at TheBlock, we have everything from conventional IR to hybrid IR, which includes AI and some great, amazing things and content creation and investor forums, all the way to the other spectrum, which is right down in Web3. How do you reach, very politely, the degen market?
Yeah.
Right? How do you reach the Robin Hooders?
Yeah.
How do you reach Gen Z Alpha? And when we look at RWAs, just taking a step back, we want to look at RWAs that fit the market. So if what gold mining is a dirty business, right? Because there's a lot of environmental factors in digging up gold. We're also looking at new ways to treat gold. How do we treat gold that's already in the ground and certified and viable? Can we leave the gold in the ground and then put a coffee farm on top of it, right? To keep it sustainable, right? So there's lots of new and innovative ways to look at Web3 with Web0 assets that make RWAs completely viable.
Yeah. Well, I want to move on to commodities and assets that are being tokenized now and new ways that it's being done. But first, I think what you said about investor relations is so true and insightful, and something that's overlooked in Web3 a lot. People don't realize that they are putting out there something that investors are putting money in. I mean, even if it's a utility token, people are still investing in it, and they completely overlook the investor relations side of things. So that's super insightful what you said. Coming from a marketing standpoint, when it comes to securities, there are laws around advertising.
Yes.
Does that apply to RWAs, and how can they be overcome?
If you're doing a security-based RWA, you are subject to regulatory requirements. There's really very little ifs, ands, or buts about that.
Yeah.
Which means the way that you market an RWA is dependent on the exemptions or the opportunities you use within the jurisdiction of your structure and your compliance. So again, they all circle in on each other. So, and that's where we really need to understand. But we have clients at TheBlock that are using sponsored gaming and sponsored events to help get their brand out there, so that people who find out about the brand can then ask for more information, which is what we would call more so of reverse solicitation, rather than saying, hey, buy my token. Yeah. Right? So when you're in different phases of your pre-sale or early stage, you have to start thinking, or your seed levels, you have to start thinking, how do you maintain the best compliance to your sales process? Yeah. Now, again, we are obviously going to see people who are not doing that properly, and they are going to be subject to a lot of issues. But at TheBlock, we want to be aggressive, and I don't mean negatively aggressive. We want to be aggressive in our marketing, but we're finding new and innovative ways to reach audiences and engage with audiences that are genuine and authentic and fun, so that people want to be part of a new opportunity.
Yeah. Can we talk a little bit about that project? Because I find it super interesting.
Right.
And I think it's a great example of creative marketing.
Yes.
So if you can, tell the people a little more.
But OCAN?
Yeah.
Okay, so we have a client called OCAN Gold out of Canada, and OCAN is more than a gold product. And I'll take the name and dissect the name from a marketing standpoint. So it's AUCAN Gold. .com. So AU is the symbol for gold.
Right.
But Canada being a bilingual country, AU in French also sounds as the word O. Okay? And CAN, well, it doesn't take a brain surgeon to figure out CAN is for Canada, right? So, but what is the real cute play on all of this is the Canadian national anthem is called O Canada.
Yeah.
So it's sort of a tongue-in-cheek homage to our great country. But OCAN focuses on Canadian gold resources. Canada is one of the top 5 producers of gold in the world. The region in which the gold is being produced is the top region in Canada. Well-founded, major mines. Canada also is the leader in compliance for mining and minerals. We have something called a National Instrument, or NI 43-101, which is a form. But countries around the world use that standard to develop either use the Canadian standard or develop their own standards around the world around that form. And there's 5 different levels of a 43-101 that goes from a resource estimate right down to a pure feasibility study. So at the end of the day, OCAN is an exploration and production company. And some of the products that are being brought to life are rehabilitated mines that were in existence already, so we don't have to do as much damage to get in. So that's exploration and production. Then there's milling and processing, which is taking that rock and turning it into, rough bars of gold. And then there is taking it off to a refinery and then vaulting that gold. So there's exploration and production, processing and milling, and then vaulting. Yeah. And then the last one is spendability. So we're doing with the client, we're doing a token for the entire ecosystem. And then we will be doing stable coins off the gold that they have and their partners have. And then you'll be able to take those stable coins, stake them and or borrow against them, get your yield and put it right on a debit card and spend it wherever you want to go. So as a friend of mine said, we go from, in OCAN, we go from rocks to wallet.
Yeah.
So, which is a really cool statement. So that's an innovative way to look at a gold industry, and that now we're talking with the client and partners about bringing in what we call green gold, which is gold that's already again in the ground. Can we tokenize that at a lower valuation, knowing that the gold is definitely in the ground and giving people opportunities for the future without being environmentally disastrous?
Yeah.
So there's lots of new and innovative ways to do products that are truly Web 0 products.
Yeah, that's very interesting. So other than gold and properties,
yep,
where do you see tokenization being really useful? Like what kind of Web 0 products do you think could really benefit from being tokenized?
Money services businesses, businesses that are effectively in the business of everyday lending. We're looking at new technology processes that are cutting edge to create more high-end products that weren't currently available, allowing public companies to find new ways to raise capital without dilution or massive dilution.
Yeah.
So there's all different types of products. A data center for AI. One of the coolest things, and I'm going to go back to gold for just a second, but because this is really cool, and it fits gold because of the mineral the metal value. But if you can tokenize gold in the ground and create sustainable products above, you can help alleviate illegal mining, child labor mining.
Yeah.
You can take some of that money as a country and as a company and invest it in the local economy, increase education, opportunities for women in regions where those opportunities are diminished, put in food insecurity. So there are so many good work projects that you can bring to life through RWAs and Web3.
Yeah, amazing. That's incredible. Thank you so much.
Thank you.
For all the information. We have the 5 buckets of RWAs: structure, compliance, primary offering, secondary listing, and marketing.
That is correct.
That was a very, very insightful conversation. Thank you, David.
Thank you, Nikki.
And thank you guys for watching. And as always, thank you to Web3 TV for this amazing studio.